Gary Mishuris, Managing Partner and Chief Investment Officer of Silver Ring Value Partners in Boston. You have a view here on behavioral finance which is what prompted me to want to invite you onto the show, because behavioral finance in many ways is kind of central to contrarian investing in the first place. The idea here that the crowd has gotten something fundamentally wrong about the market and is either overpricing or underpricing assets as a result. And being able to identify those situations and then profit from them is, of course, the contrarian's creed, if there is such a thing. But anyway, over to you. Maybe you can tell me a little bit about your approach, your views of behavioral finance specifically, and what the market is getting wrong right now.
Sure. And again, thank you for having me. I appreciate the opportunity. And I think you have to think as an investor about your edge and what is your edge, right? And there's a few potential sources. In the old days, so I started my career at Fidelity, and before Reg FD, you could dial for dollars. You would hear stories from portfolio managers, from the Peter Lynches of the world. You could call a CFO and ask them how the quarter is going, right? So that would be an example of an informational edge. Nowadays, if you do that, you're gonna, go to jail or something like that. So that's kind of gone away. Plus, with computers, there's very little information that's not out there in people's hands. There's an analytical edge, which is, you're looking at the same data and you maybe are thinking about it differently. And that exists out there, and I do use that sometimes. And I think a lot of people nowadays focus on that analytical edge. But I think there's a third edge that's probably underutilized, and that's what I think it's worth talking about today, which is this behavioral edge. And that's not necessarily that you are analyzing anything differently, is that you are more aware of behavioral biases, how they affect other investors, and how they affect yourself. And you are better able to play, combination of offense, meaning taking advantage of the behavioral mistakes of others, and defense, which is minimizing or, at least limiting the impact of those biases on yourself.
Hmm. Very interesting. Okay, so let's talk about the second one of these, because that's somewhat unusual and unique. We all know about the first, which is that, okay, the markets, and the one that I touched on at the outset, which is, okay, the market's got something wrong here. How do we profit from it? But now you're saying that this is also something that affects investors' behavior in terms of making mistakes. Tell me more about that.
Yeah, so I think that basically, you think about yourself, right? When no one is immune from these biases, except for me. No, I'm kidding, right? That's what we all
And
think.
me,
We all want to think like, well, there are all these biases out there, but they really don't apply to me, and that's like the number one bias, right? So I
right?
think first is admitting that those things affect you just as much as anyone else if you don't do anything about them. And then I think you have to be systematic and disciplined. And how do you set yourself up to minimize them? Which, by the way, I think is the best you can do. I don't think you
Okay.
can eliminate them,